Okay, here's the last one. This is on nonprofit, or also called not-for-profit corporations. The reason that we cover this is many of you will serve on boards of nonprofits, volunteers. They can be church boards, they could be hospital boards, uh, the charitable boards. There are all sorts of different types of charitable nonprofit activities. And I think it's important for you to have a kind of a basic understanding of what some of the guidelines are, especially on business that's done by nonprofits. Okay, a nonprofit corporation. Remember that this is a corporation that does not have any taxes. It's not that the tax is passed on to somebody else. It is a non-taxed entity. They're also called 501c3 corporations. The 501c3 comes from the IRS code that specifies what kind of a corporation qualifies as a nonprofit. They are like S corporations and any other corporation. It is a corporation and it's formed by state laws. It's specifically for religious, educational, charitable, literary, or scientific purposes. You can actually go to the IRS code 501c3, and they have some other ones listed as well, but those are the primary ones. How does a nonprofit operate? It does not have shareholders. It's usually run by a board of directors, often called a board of trustee. Well, who elects the board? Well, it's kind of interesting because the board elects itself. There are not shareholders. They may have some formal members, but there are not shareholders. And usually the board is self-perpetuating. The board elects new members. Somebody resigns or they finish their term, and the board will then get a slate of candidates and elect a replacement. So it's a self-perpetuating board. They must observe formalities of a regular corporation, have annual meetings, file minutes, things like that. Can you terminate a nonprofit corporation? Yeah, the directors vote to dissolve, can be dissolved by a court in bankruptcy, can be dissolved by a state attorney general if it's abusing its nonprofit status. So what happens when a nonprofit corporation ends? Well, its assets are distributed. First, any assets that it has go to repay debts. All remaining assets are distributed to another tax-exempt nonprofit corporation. The unique thing of a nonprofit corporation is that no individuals, corporations, partnerships, anything, can make any money from the nonprofit. All of the earnings, and nonprofits can make money, they can have profits. All of those go to the organization itself. It stays in the organization and it's used to expand the nonprofit purpose of that organization. So a not for profit company can make a profit. It's just that the distribution of that profit is limited to the nonprofit entity itself. If that entity goes out of business, then it has to give it to other nonprofit entities. Why form a nonprofit corporation? Well, many of the same reasons that any corporation is formed. For one thing, it takes and gives, it shields and gives corporate protection for the board for any liability. It also is necessary for applications for public or private grants. A lot of times they will not give money to a nonprofit unless it is a formally formed nonprofit. It allows that that nonprofit corporation can solicit tax-deductible contributions. Not only does the corporation, the nonprofit corporation, not pay taxes, but anyone that donates to a 501c3 corporation, a nonprofit corporation, they can take that as a reduction of their income on their income tax statements so that it lowers their tax costs. There's personal, as I said, personal protection from liability and advocacy lawsuits. The status of a non-profit corporation is a 501c3. You can go to the Internal Revenue Service and look this section up, and it has all these rules and regulations about how a nonprofit has to operate. It also must qualify under state laws. So the state laws mirror the federal laws in making the nonprofit non-taxable at a state level as well. In fact, that non-taxation goes not only to income tax, it also goes to real estate taxes and often sales taxes. So it's very important for a nonprofit to make sure that it forms itself properly and keeps itself in good legal standing. If a church owns property and then rents to an accountant for their office, well, that's going to be unrelated business income. We're going to be talking about that later. So some of the income can be taxed from a nonprofit corporation. Okay, can a nonprofit company run a business and make a profit? Yeah, hospitals do it. Lots of different businesses do it. Churches actually have, quote, a profit because if they get more money donated than they spend, then they would have a positive income. So if it's coming from related activities, if it's a church or a charity, if the income is coming from those related activities, such as taking donations, offerings, things like that, then it's non-taxable. What are related activities? Those are the activities that follow the purpose of the nonprofit. It takes that profit and it uses it for its expansion and its own profit, its own charitable purposes. Does that mean that a nonprofit can pay employees? Of course. SNU is a nonprofit educational institution. They pay the employees. So it is possible to pay employees, and those employees would pay taxes just like anyone else. So the non-tax status goes to the corporation, not to the employees. A qualified nonprofit does not pay taxes on its related income, but tax on unrelated income is called unrelated business income tax, and it's called UBIT. It's the tax on that unrelated business. So what is a unrelated business? Well, unrelated business is a trade or business. That means it's something is being sold for goods or services that is regularly carried on. That means regularly is not once a year. It's also talking about frequency. So if it's done every week or once a month, that would be regularly carried on. But if it's like a banquet or a golf outing or something like that, then that is not regularly carried on. That's once a year. It may be every year, but that does not make it regular. So think of regular as frequent. That is not substantially related to the purpose of the entity. That's kind of the key. So that's the three-pronged test. Is it a trade or business? Is it regularly carried on? And is it substantially related to the purpose of the entity? So regularly carried on a few times a year for 1 or 2 weeks is not regularly carried on. Once a week throughout the year, that's probably getting close to regular. It's a factual question asked in each case, not substantially related to the purpose of the entity. And this is something that many people confuse. They think that a church or a charity that's doing something and the money goes to that charity, it's then related. No, the related activity does not mean that the money goes to it. It means that the activity itself is not related to the purpose of the organization. Does the activity further the purpose, not just furthers the financial stability of the organization? Activities and income can be split between related activities and not. For example, if you have a museum that has a gift shop and it's selling copies of the items from the museum, it's educational, that fits in the purpose, but it's also selling widgets or gadgets, other things, that postcards or sodas and things like that. That is unrelated business. That has nothing to do with its purpose as a museum. Those sales will be taxed. Okay, exemptions to UBIT. Work is performed by volunteers. So if volunteers work it, it is not a UBIT. Goods to be sold are donated to the organization. For example, thrift stores. Reaching Our City is a charitable company here in Bethany. They have a thrift store down on Rockwell, and they pay the people that work there, but all of the goods are donated, and then they are sold. Therefore, it is exempt from UBIT. Bingo is specifically exempted because this was something that a lot of churches do, and so the Congress allowed them to continue doing bingo even though it doesn't meet the purpose test of a business, but it has to be done not on a commercial basis and generally on the premises with cards. If UBIT becomes too substantial, it means that that tax entity may lose its tax status because it's now it's doing most of its business taxable with a little bit of non-taxable. The bad news is if you lose that tax deduction, you have to pay back taxes of whenever the IRS decides that you have no longer been a nonprofit. But most importantly, the donors would have to be to revise their tax returns, and if they had taken a deduction last year and it was determined last year that the company was not a nonprofit, they'd have to go and revise their income tax as well. The other thing is it will not allow the if it becomes a taxable entity, then future donations will not be tax exempt, and that'll have a major impact on the fundraising capability of an organization. You can have feeder organizations, and these are taxable entities owned by the nonprofit. They pay the tax, and therefore there's no threat to the non-tax status for the entity itself, and that's an example of the True Bethel case. So when you're going to have to be reading it, looking at it, doing some work on the forms, but how was it organized? If the Subway shop continues to grow and increase profits, will it affect the tax-exempt status? No, because they're using a feeder organization. They have a separate corporation that is running the Subway. Is there not a taxable entity would operate it? How would you argue that it become not a unrelated business? Well, you would have to then look at it and say that this Subway, the purpose of the Subway was not to make money for the church, because that's not related to the purpose of the church. The purpose is to train people in the community to be better prepared to work, and if that's part of their charitable mission, then you could say that it's a training facility, and therefore the Subway is in fact part of the primary purpose of that nonprofit. 501c3 is absolutely prohibited from getting involved in political campaigns. That doesn't mean that a church or a charity cannot have a voter registration, because that's not advocating for a specific candidate. A church or a charitable organization can have an educational meeting talking about issues, so long as it's not carrying and promoting it for one candidate or the other. Okay, you can go look at the IRS code. Quick question: if a church does a golf outing once a year, is that a UBIT? They charge everybody $50 or $100 for that golf tournament. Well, first of all, is it a business? Yeah, there's a lot of golf clubs around making business, so they're selling a product or a service. Is it regularly carried on? No, in this case it's not. Once a year is not regular. The third question is, does it meet the purpose of the church? No, even though the money will go to the church, it is not the church's purpose to be able to run golf outings. So if it wasn't for the fact that it's only done once a year, it would be UBIT, because it is not meeting the purpose of the church. What about a church does a car wash? Well, if it's done every single week and the purpose of the funds go to raise money for kids in the neighborhood to go to summer camps, great purpose, great community reason. So you have to look at it and say, is it a sale? Is it a business? Yeah, they're doing a service. Is it carried on a regular basis? Yeah, they're doing it once a week. Is it the purpose of the church to wash cars? No, that's not the purpose of the church. Even though the money is going to a purpose of the church, that is not the test. Does it meet the fundamental purpose of the existence of that church? Then you look to see if there's any exemptions. Are everyone washing the cars volunteers? If so, then they are exempt from UBIT because of that. But if not, if it's not volunteers, they're paying the kids a hourly salary to do it, then it would be UBIT, even though it's for what appears to be a great purpose. Very good. Great having you in the class. God bless.